Hello, this is Phil, Laptop Trader on YouTube. Welcome to our community. Welcome back. My email contact is laptoptraderphil@gmail.com. Quick disclaimer caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for information purposes only. Invest in yourself, then invest in the markets. That's what we believe here. So for this month's video, we're going to review the markets here for you. We've got our review the monthly charts. So there's a SPY ETF. It's made a nice move up, made a new high in March of this year. Then we had some selling in April. Now it looks like we've reversed back to risk on. So as far as the general markets are concerned right now, investors are generally willing to pay up for these current markets. If we look at a weekly chart, you can see that sell off over a 3-week period and then right back to the top. So that looks pretty strong. Take a look at the other monthly charts for our markets. Here's the NASDAQ QQQ. Same picture. Selling in April and buying in May. IWM, Russell 2000 ETF was in the sideways trend for almost a couple years. Kind of made this new higher range, a more condensed range where this range was pretty wide. Now we've made a new condensed range. I don't like that it sold off pretty hard in April, but it is being bought up in May, so that looks potentially higher. Dow Jones stocks have been stronger, pretty strong this year. It was in this flat range for a long time, then kind of came up out of that range. So it's looking more and more like this pullback in April is just more of a buying opportunity for the overall markets. Transport stock index looks was sold off very hard in April. It has recovered about 40% of that red bar. So that's a little bit less certain on that, if that can continue that this month or if that's going to sell off. Our volatility indicator, our fear index, has returned back down to low levels, 12.5. Close the week. We had a nice spike in volatility in April, and then that was reversed. So volatility says markets should be going higher. Mid-cap stocks are again making a higher range here versus where it was at the last couple of years. So that looks good. Same with small caps, very similar looking chart. Higher range versus this wide sloppy range. So that looks bullish overall. Again, guys, this can change. Now, just because we've had some buying here first week of May does not mean that we can't have selling the rest of May. So you just have to watch for yourselves. Use risk management and money management if you're going to enter any trades. Take a look at energy sector. Energy has been back and forth for quite a while. We had quite a bit of buying in March, new high in April, and then some selling, and then just made a lower low versus April here in May. So energy doesn't look as strong as the other sectors, but still trading towards the top of this range. That could go either way. Financial sector, again, was in a range for quite a long time. Then very steady buying in financials until April, and now it looks like we've got a reversal so far in May. I would kind of like to see financials actually sell off a little bit, come back here to give us a little bit better buying opportunity, but for the time being, this looks like a continuation pattern higher over this resistance to the left. See all that resistance? Consumer discretionary, and a very slight uptrend here on the monthly chart. It's trading around this moving average area. Looked weaker to me over the last 2 months than the others, whereas the others had a nice large buying candle in March, selling in April, but now we're trading towards the middle of this range. When we compare April to May, we're right in the middle. So that could go either way when it comes to consumers. Overall, it does look higher. We've got higher lows. So just not as strong as the other ones. Healthcare, steady buying for 4 months, and then we had some selling here in April. Looks like possibly the buying has resumed in May. So healthcare actually looks pretty good there. Technology sector, we had 2022 sell-off, 2023 buying, and now just had this pullback. It's looking like a pretty good buying opportunity for technology. Utilities is kind of a surprise. One of the strongest sectors recently. Definitely in this new uptrend over the last 4 months. And that just looks higher right now. Would not expect utilities to get carried away as far as price goes when compared to something else like technology or consumer discretionary or financials. This is just not it's not really considered a growth sector, but right now it is growing. So utilities right now looks higher, whether you look at a monthly chart or a weekly chart. I would like to see, if I was going to participate in utilities, I would like to see a pullback to maybe somewhere in this area, 66 to 67 area, if I was going to participate in utilities. Industrial ETF, again, higher range, tighter range than before. We have this buying in March, selling in April, and now a reversal in May. So over this area, I like that to go higher. Let's say over 126.5. I like industrial sector in general to go higher. Material sector looks very similar to industrials. Those two are related. So that is closing over this resistance to the left. Get over this red candle. I really like that to go higher too. Communications, still in an uptrend. We had some selling in April. And that is just reversed here in May, so that looks higher for now. Consumer staples has been in a very large range for a long time. Made a double bottom here in October 23. Since then, has been on a buying, a bullish trend here, month after month, just buying. Then we had a bottoming tail in April, and now resumed buying in May. So this definitely looks higher. This is one of the most purchased sectors this year. So that looks even better than the rest, really. I like that right now. Or companies within consumer staples. That looks very strong right now. Finally, real estate is one of the weakest sectors right now in this basically the stage 1 area. It does have a little bit of a higher range, but there's more selling in April in this sector than the others. And I would like to see this maybe over the next couple months get over 40, and real estate could be a possible sector to invest in. But right now it actually looks a little bit lower, like it could come down and retest this area again. That's it for that. As far as our sector, look at our sectors. Let's see what else I can show you guys. Let's look at this is a bond ETF, TLT. Generally, as interest rates go up or stay up, bonds will go down. It looked like we had a bottom in bonds here in October, but it looks like we're going to retest that low based on this monthly chart. So bonds still look in a downtrend. What else do we got? I think this is regional banking. Yeah, regional banking looks like it has made a little bit of a comeback here after this sell-off. We got a low, we got a higher low, and then we got this some tighter price action. So regional banking looks like it could make this move up from where it's at, maybe a $10 move. So regional banking ETF looks pretty good right now. MJ cannabis sector looks like it has made least a bottom in the stage one. And there's definitely some more interest in the sector right now. You can see the volume increase for that sector. So that's one to watch for you guys. And what else looked pretty good? This ETF, which tracks what's called an Investors Business Daily 50, very popular publication and website. Very good for investors, actually. But this looks like it's making a long-term bottom, starting to move up. So I like this ETF over this area, over 28, maybe. Right now it's at 27.34, so over 28, I like. Symbol FFTY. What else we got? Natural gas looks like it might finally be making a bottom. It's just been flat forever. We look at a weekly chart. You see some more detail. Again, flat for over a year. Daily. Start to see a little bit of activity on the daily chart. Got this long-term bottom. We've got all-time low. Starting to make a little bit higher lows. Starting to kind of move up out of that area. I would say if it could get over this pivot right here, get over 1950 maybe, 1970, I would maybe consider this natural gas sector. Same thing with UNG, so it's kind of made this move up. It'd be very early for sure. I wouldn't get too committed to natural gas right now. What else do we got? That would be like a bottom feeder type of trade there, where you're trying to buy the bottom. And one more ETF to consider would be, let's see, we can look at this consumable fuels sector is very interesting, where it's made this big move up and kind of traded sideways for a while, and then prices tightened up and then moved up out of that area. So I kind of like this. It's expensive. This is more, that's over $800 ETF, but that looks higher. And these commodities all look higher. All this gold, silver, and copper have been basically bull markets recently. It'd be nice to see a pullback or a buying opportunity in one of these gold, silver, copper. Right now they're a little bit extended up, but that doesn't mean they can't go higher. And then interest rates, 10-year interest rates have made this move up to almost 5, pulled back, and have moved up over the last 3-4 months. If that continues higher, that would be a negative for the markets, along with these commodities continuing to go up. And look at this one. Yeah, this 2-year note is in a downtrend. But the 13-week Treasury notes are more in the sideways trend. If that should move up again, that would be negative for stocks and equities in general. So, and I picked out these 3 ETFs for you guys that I think could be potential investment opportunities. This DB Agriculture Fund was in a sideways trend for a long time and recently moved up, moved back. So far, we've got a bottoming tail bar in May. That looks higher over this area. I would say over $24.90, $25. That looks higher for agriculture. I also pulled this up for you to show you what's in that fund. I'll have 3 ETFs for you and about 12 stocks to cover. This fund, you can see the 5-year chart, it's kind of a big uptrend. Does pay a dividend. Does have a kind of a high management fee of under 1%, 0.91%. But this is kind of what's in that fund. Like wheat and corn and beans and all these commodities are in this fund. So you can buy this fund for a fairly low price, right? Under $25 a share. So I kind of like that if you want exposure to commodities, which would be a play on inflation. I also have for you this fund. FFTY Innovator IBD 50. Again, over a 5-year chart, we can see the stage 2, 3, 4. Now back to stage 1. It's starting to make some higher lows in this fund. And then you can see the top 10 holdings here, including NVIDIA, GigaCloud Technology, Comfort Systems, CrowdStrike. So there's some tech. You definitely get some exposure to some tech at a decent price per share, $27.34 per share closing week there. Finally, I still like communications sector overall. Business sector. And we've got this has a low management fee, does pay a small dividend, but price earnings is very low for this sector, just under 16. And this is what you get in that fund. Top 10 holdings: Meta, Alphabet, T-Mobile, Netflix, AT&T, Verizon, Comcast, and Disney, and Electronic Arts. So you get some nice exposure to these companies through this fund for under $100 per share. So I really like that. It's moved up towards this resistance, this 5-year resistance, but it looks like that could continue higher. Those are quality companies in that fund. So if you want some exposure to multiple companies and ETF investing, I think those three right now look positive. Let's now look at, close out our monthly video. I'm going to take you through 12 individual stocks that I found. Each have different characteristics as far as investment quality or the way the charts look. So we go from this list to a weekly list. First one we'll have on the list will be symbol LPG, which is related to energy, I believe. Daily chart was in a sideways trend, moved up, broke that sideways trend, retested twice, and then started to move up. Just made a new high on Friday, but pulled back. So if this could maybe pull back here a little more, I would like that as a buy setup. It trades sideways around that 44 area for a few days or 2 or 3 days, and then moves up. That would be a continuation higher. Symbol LPG is a continuation or a buy setup. Then we've got this one I like is a long-term stage trade. This has been just in a selling. It's almost climactic, right? It's just made a new low last month. We had this green bar, then we had this red bar made a new low. Volume has really picked up, and now we've got a reversal bar on volume here in May. So this is a big company that has earnings and dividends, but for whatever reason has been sold off for quite some time. So almost over a 2-year sell-off in Pfizer. So if you're looking for something like value long term, I kind of like that one. If we look at a weekly chart, we can see it's still in a downtrend, but we've got kind of this pivot low, followed by a pivot low, like a double bottom, and then another low, followed by a nice range expansion bar on volume. So this is looking like stage 4 to stage 1, very early entry on this stock. So you may want to wait a few weeks and see what happens, but that looks like that has at least found a bottom in Pfizer. So that would be a speculative trade there, trading a triple bottom. And we have another one here, Westlake. This would be more of a continuation higher where we've had this long-term almost range, broke out of the range. This was a clue that it was going to continue higher, this large, wide range green bar on volume and earnings. And now we've got kind of this buy set up on the weekly chart. So that looks higher as a continuation higher in Westlake Corp, symbol WLK. I like this one over 137. So we had a big range, tested the top of the range, pulled back, and then shot higher. When this type of buying happens, now we're looking for some sort of area that we can get in. This is starting to make higher lows here. I would say over this area is very positive. That's why I chose that number. Here's a resistance. We got resistance here on this bar, but I think we could overcome that. So over 137, I like exposure to steel dynamics, steel industry, symbol STLD. We've got this company, SMG, Scott's Miracle-Gro. I like this because of a seasonal agriculture, and people are out there putting out grass seed or grass fertilizer all over the place. So it's a seasonal play. I like Scott's Miracle-Gro, symbol SMG. A long-term double bottom, higher low, and it looks like this is going to turn up. So if this turns up this week, I like that over this area. Got a very slight uptrend, but I like that as a seasonal play. I also like this company, GIS. General Mills is a play on consumer staples, right? We have this double top, straight selling, back to stage one, early, stage two, right? We got a double bottom, higher low, the big nasty red bar followed by buying, right? A reversal bar. Now we've got these tighter bars. I really like that over this candle here, high over 70.86. So maybe over $70.90. I like GIS, General Mills Company. And we've got this next one being very speculative, Spotify. It has been in a serious uptrend for some time, and it's starting to get climactic, in my opinion. Not a cheap stock, 294.60. But the market likes it. We had this big range expansion bar. It retraced almost 100% on earnings. Now it's slowly making these higher lows. So when we look at a daily chart there, can we see an entry? Kind of see this playing out where it looks messy, but it's starting to make these higher lows. Price is starting to tighten up. I don't like this bar on Friday. I would need to see some more evidence that's going to tighten up and start to move up. I would say this company over, probably over 305. I like it better than I like it here. Or if we saw some more buying coming into this stock, if we saw some more volume, I would like it even better. It's not a cheap stock. I would not get overexposed to it. Their fundamentals are improving. Technically, they don't make money. It's a very popular service. Spotify company, symbol SPOT. So that would be speculative. I would take very little exposure to it, but that's one that could keep going higher. Micron I really like right now. Symbol MU. Exposure to technology and semiconductors. I had this move up after earnings, came back in, and now it's a little bit higher range. That looks higher. I like the risk to reward on this one with a small candle reward up here to 130 to 140. Right now it's at 121.24 for Micron, so I kind of like that risk to reward trade on Micron. And we've got this one, symbol PRU, Prudential Financial. This had sold off conservatively and kind of spot up after earnings. On this pattern, we just made a new high. We've retraced 100% back up to here. This is one I'd be looking for a buy setup, right? Pull back and then turn higher. Right now, I think it's a little bit too extended, right? We've got higher lows for 6-7 days in a row. I would like to see a buy setup in Prudential Financial. We've got another financial company, AIG. It's kind of had a move up, pull back, another move up after earnings. I like the consolidation here, new high. This could either be a continuation trade, or it trades over that continuation trade, or look for a buy setup. Look for a pullback and a reversal around maybe 78, 76 to 78 area in AIG. Goosehead. symbol GSHD, Goosehead Insurance. This was sold recently after earnings. And we had this gap down on volume reversal. So that reversal bar where it was red, next day is green, and then it starts, price is just slowly moving up. On this one, they have pretty good fundamentals overall, but on the weekly chart, it looks climactic. Broke its support, made a new low, now it's starting to turn up a little bit. See the volume. This can at least maintain this level, maybe come down and even retest here, or at least get moving up over maybe over 63 or 64 bucks. I'd like that to turn higher, but that would be very speculative on this one. There's a void here, so you got this void up here. The price is sold off, created this void to move up. I like the risk to reward on this. If it can move up, you've got a nice reward potential of $90, $91, or even $100. This was an uptrend until recently and sold off. So that would be watch and see. Finally, shows this last company, CHX, Champion X. I believe it's related to oil. And for a long time, it was in a trading range. Moved up out of that range, but then sold off 100%. Now it's moved up more than 100%. Made a new high in early April and is sold off with the markets in April. Now it's looking like it could turn up, right? So in this case, this retracement here to here, we're looking for that 50% area. If that can make a turn, I like this company move back up over $40. So currently it's $34.23, so that would be a nice risk to reward on Champion X if it can move up. Symbol CHX with exposure to the oil industry. So that's it for this month. You guys, thanks for watching, liking, and subscribing. Again, this is Phil, Laptop Trader. Again, here's my contact details, laptoptraderphil@gmail.com if you have any questions. And we will see you again in June. Have a nice spring. Bye.